Hi, I'm Brandon Ketron here on behalf of EstateView Planning Software, and today we are going to go through how to use the Qprt planning module. So you see when you pull into EstateView, you have your home screen here. We have the Qprt planning module as one of the options that you can choose. Qprt, of course, stands for Qualified Personal Residence Trust. And the Qualified Personal Residence Trust is an estate planning technique that we can use to remove the value of a personal residence outside of the estate and make a gift to a trust that would be outside of our estate at a value that is discounted because, one, we are going to retain the right to live there for a certain number of years, or the grantor retains the right to live there for a certain number of years. So only the remainder value would be considered a gift to the trust. And then as we get into some of the more complex planning, you will see that after that retained usage term, whether it's 8 years, whether it's 10 years, whatever term you decide is appropriate, we can actually show the grantor paying rent to continue to use the home, which would be a fair market value rent because we would not want the grantor to be deemed to have a retained interest in the remainder trust after the initial term ends. Otherwise, the trust would be included in the grantor's estate. So if we have fair market value rent, we can show the benefit of actually paying rent to the trust to continue to use the home. That rent can be used to pay the expenses of the property. To the extent that it's not used to pay the expenses of the property, it can be invested and can grow in value outside of the estate. And it's a weird conversation to have with a client if we're going to set up this trust. You're going to have the right to live there for a number of years, but after that, you have to start paying rent to this house that you own or you owned, that you've paid off the mortgage on, that you have never paid rent for, and now you're going to start paying rent. But the benefit of that is that payment of rent is not a gift to the trust, doesn't use exemption, and it's decreasing the grantor's estate because they're now shifting wealth and shifting assets outside of their estate to this trust. And it can be done in a way that that's at fair market value and no estate or gift tax consequences for payment of that rent. So it actually works out really, really well by paying rent. But again, it is a interesting conversation to have with the client. But I think using the software and showing how it actually works will enable them to understand that and the benefits that it can provide. So I'm starting here in standard mode. This is the basic planning module for the Qualified Personal Residence Trust, or the Qprt. And in standard mode, we have a limited number of inputs and a limited number of results, but it will get you what you need to do the calculations for the Qprt, to determine the value of the gift, to determine the value of the remainder interest, and to determine the annuity that would be paid if for some reason the Qualified Personal Residence Trust sells the property during the retained term. You can either buy a replacement property and use all the proceeds to buy the replacement property, in which case there would be no annuity paid from the trust. Or if there is not a replacement property bought, the trust would pay an annuity back to the grantor to make up for that retained term of years that they were deemed to have retained the right to use the trust assets, use the home, or then receive this annuity. And it will tell you that number that you need. So if the house is ever sold, you will have that calculation available. So I'm going to use an example here of a 70-year-old grantor. Let's say they transfer this today, so I'm using today's date that I'm recording this webinar. Today, the 75/20 rate is 5.4%. That's something that automatically comes populated into the software. So for example, if we were going back into January 1 as the transfer date, it would tell us that the 75/20 rate is 5.2 there. If I go back to today's date, May 24th, it automatically adjusts to 5.4%, which is the 75/20 rate in existence. We can do this on a number of lives, 1 or 2 lives. We'll just use one for simplicity here. The grantor's age is currently 70. And the interesting part about this, something to keep in mind for planning and when you're inputting this information, it's the nearest birth date that is relevant. So for example, if I was turning my birth date is June 4th, 1990. I'm currently 33. I have not yet turned 34, but if I was doing a Qprt for purposes of this calculation, I would need to use 34 as the grantor's age, because that would be my nearest birth date. So if you have a 70-year-old individual that might be turning 71 June 4th, then you would need to use 71 rather than 70. But to keep things simple, let's just assume the grantor is age 70 and his nearest birth date also makes him age 70. The term of the Qprt here, we can enter in the number of years that we want to use. We won't want to go too long, because if the grantor dies during that retained term, you'll see the assets are brought back into the estate. So typically, this might be set based upon their life expectancy, based upon how long they would want to use the property, how quickly they want to start paying that rent. In some cases, it might be a short-term Qprt so they can start paying rent if they're comfortable with that. But there's a number of different variables that go into how long the term of the Qprt could be. Those are just a few that I mentioned. So you can discuss that with your clients, with your advisors, to determine the appropriate length of the Qprt term. And we're going to say the home is valued at $3 million. So let's click to see our results. Up here at the top, you see click to see results. It will give you your inputs as a summary in the blue columns here. We'll give you the results on the green columns and a little bit of details about each result. So the retained income factor, the retained reversion, and the total retained interest, it's just a combination of these two numbers, the retained income factor and the retained reversion, right? To give us our total retained interest at roughly 47.475%. The gift factor, therefore, would be the difference between 1 minus the retained interest factor. So to get our value of our gift, we multiply the value of the home times the gift factor to determine the amount of the gift. That's what's going to be reported on a gift tax return if a 70-year-old individual transferred a $3 million home with an 8-year term to a qualified personal residence trust based on today's 75/20 rate. Then you have the retained value here, and then the annual annuity after sale. As I mentioned, if this house was sold in, say, year 6, then this grantor would get back roughly $244,600 for year 7 and year 8. So that's just the basic, right, inputs that you would need to complete a gift tax return on a Qprt. So now we're going to go to the Pro mode, which gives us a few more inputs to input into our software. We now can show a spreadsheet that shows the year-by-year results of the qualified personal residence trust. So we can put in the grantor's year of death. We can put in the number of years that we want to actually illustrate. We'll make that equal to the year of death. And the nice thing about EstateView, right, is you can click up and down on any of these. You can put in an actual number if you like. You can type that in. So we'll stick with him dying or her dying at age 90, 20-year term, value of the home. Now, just for simple Pro mode or standard mode, we can't input a growth rate on the home. It's automatically just assumed in the illustrations that the home grows at 3.75%. We may add that feature to Pro in the future, in which case you would see it pop up here on your inputs. But for now, it's just an assumed 3.75% growth rate. And we click to see our results. So you can see here we have the beginning value, the growth of the home, the ending value, and then as I mentioned, if we die in the retained term, that 8-year term period, it's going to be included in our estate. So it's a no harm, no foul transaction. What would have otherwise been included is still going to be included. So you can see the first 8 years, there's no estate tax savings. But if we survive the term, in which case in this scenario we have, you can see here at the green line is when the Qprt terms ends. And now that home is outside of our estate. And as it continues to grow in value, you can see the estate tax savings that result as a part of that qualified personal residence trust plan. Now, going to Pro Plus mode, there is a few more details that can be inputted into the software. So I'll start back over and go to Pro Plus mode here. Again, same assumption, 70-year-old client, 8-year term, 90 will die at age 90. We got the value at 3 million. We're going to show it growing at 3.75, the gift tax rate at 40%. So these are adjustable if you happen to have a state gift tax that might apply, or a state estate tax that might apply. You can adjust up and down. This is just simply the federal 40% rate by default. So if, for example, there was an 8% estate tax on a state level, then you can change that to 48%. Same thing for the gift tax rate. The ownership percentage, whether they own the home completely or they might own it with their spouse, in which case this would be 50%. A valuation discount, the discounted value. What are we going to pay in annual rent after the term ends will be inputted here. How long will we pay that? Will it be for the rest of our life, or would it be for a number of years? You have that feature to show in EstateView. To the extent that it receives cash from that rent, what is that cash going to be invested at, and what is that rate of return going to be? That's here. Are we going to pay the tax on it? Will this continue to be a grantor trust, or will it be a non-grantor trust after the term ends? As by default, we show this as a grantor trust, but you can change that assumption if you like. And then what is the tax rate that's going to apply on that rent as it is invested? So I think here we'll show this simple one as if it's a single person owning a $3 million home, transferring to a qualified personal residence trust where the remainder beneficiaries would be the grantor's children. Now I'm going to alter some of the detailed columns because in Pro Plus mode, there are additional features here that we can show. And I'll remove those from the Pro mode so they wouldn't just show up as zeros. So we have our rent amount due, the total cash from the rent, the tax on the rent, the cumulative savings, and the cumulative estate tax savings. So I will show the results of the Qprt. This is Qprt 1. And as you see, same scenario. If we die during the retained term, we don't have to pay rent. But if we die during that term, the assets are included in our estate. No estate tax savings, no harm, no foul transaction. If we survive the term, so we survive the 8 years, now the asset is outside of our estate. We can see here the likelihood that we would survive to that retained term would be 76%. So a pretty high likelihood that we would survive this retained term, in which case we might want to possibly increase the term. That's the conversation you could have with the client. And as you can see, we could just do that automatically here in the software. And if we want to run it out to their life expectancy at age 86, which tells us here what that age is, 85.4, so maybe we back it down to age 85, that would have a 50% chance of success based upon actuarial data and a 50% chance of failure based upon actuarial data. So depending on your client's risk tolerance, you can show them this feature. I'll go back to our 8-year term here. We have the beginning value of the home, the annual rent amount that would be due, the growth of the home, the end value, the trust receiving cash from that rent payment after the 8-year retained term. This is the cumulative cash received year by year. This is the annual rent amount due here in this column. Is there taxes on that rent? The cumulative tax paid, which would reduce the grantor's estate even further by paying taxes on behalf of the grantor trust. The estate tax savings from that rent feature, the assets that are subject to estate tax, what's passing outside of our estate, and then the total estate tax savings. Now we can further break down the estate tax savings by showing the estate tax savings from the tax on the cash from rent. So here is that number here in this column as well. Now, as you can see, the difference between including the rent at the end kind of provides a significant level of planning here. We are able to pass out cumulatively, based upon how that rent building up is, $6.9 million in addition to the $6.2 million home as it's grown in value year over year, for a total of 13.1 roughly passing outside of the estate, which is total here on the far right hand side. So this assets passing outside of the estate would be the total of the home value plus the cumulative cash that's been stored up under the trust from those rent payments and the growth on those rent payments year over year. In our estate tax savings at the end of the day, when the grantor dies at age 90, $4.6 million with a simple gift of 1.5. So how can we make this even better is we can actually show the client, and I will duplicate this. So you can see now I have Qprt 2. My first scenario is still up there at the top, to where if we just did one Qprt owning 100% of a home, if instead we had this owned by a husband and wife, husband will do one Qprt, wife will do a separate Qprt, we can show the results of that. So we'll change this to 2 lives. Grantor 1 is age 70. He's got a little bit of younger spouse. Let's make the spouse age 65. The term of the Qprt will be 8 years again. The number of years we want to illustrate, all that can be changed just like we did with the other scenarios. So the owner percentage is now going to be 50%. And because we have 50% of a home, we can show that that might receive a discount, because if I'm selling this to a willing buyer and a willing seller, they're not going to pay 100% of the value for just a 50% interest in the home. So there'll be a slight discount associated with that. It would be right around 15% is what we like to use. And the discounted value would then be 1.25. We're going to show rent being paid for the rest of the life. The cash on that rent growing in value at 7%. A little bit of taxes on that rent payment. So now we have the value of the home discounted by 15%. So our gift, I'm going to go back to change this to just one life so we can kind of compare them apples to apples here. 50% ownership, instead of being 1.5 for the 50% ownership, it's only 1.275. Our gift is decreased to just $670,000, and we're able to pass outside of the estate 2.3 million of total estate tax savings. If the wife also does this as Qprt 3, so husband would do Qprt 1, wife would do Qprt 3. Qprt 3, the wife is just a little bit younger, age 65. You can see her gift is a little bit higher in value because the likelihood that she would survive that term is greater due to the fact that she's 5 years younger. Now, total estate tax savings, when we add these two together, is just over 4.6 million. So that would be Qprt 2 and Qprt 3, which would be a married couple doing one Qprt for the husband's 50% interest, one Qprt for the wife's 50% interest, and the savings associated therewith. Now, how do we show this to clients, right? It's good to have on our screen, but how do we then pass along this information? Option 1, we can export any of the spreadsheets here to Excel. So we click export to Excel, it would come up. We can then edit anything that we would like on this software, change the column headings, change the layout if we want to add special logos, or any features that your firm would like to use could be added to the Excel sheet. What other ways do we have to show it? Well, here is one of my favorites. We can generate an explanation letter. So I'll do the explanation letter. We have a shortened version. We also have a checklist, and then we have a PowerPoint illustration. So I'll do all of those to show you what they look like. We can put in our client's name. So Bob is our sample of the planner name. I'll put in myself here, my title, partner, my firm name, Gaspin, Qprt, and DiNicolo. My email address, and submit. Now those will populate here in your downloaded file. So I will show the summary first. Just the short explanation populates there, gives you a short explanation of what is what. Go back to my downloads and pull up the general explanation, which is a nice letter that you can modify if you like, or send it as is, which gives you a little bit of details about how the Qprt operates. And then finally, the PowerPoint presentation, which shows how we've illustrated this, a little bit of a disclaimer, a summary of the transaction, kind of some general information about the technique using the inputs that we put into the software are automatically populated in. So this is for the first Qprt that we reviewed with a $3 million home, single person owning 100% to an 8-year Qprt, have our reportable gift, have the value there. Now this is the impact during the Qprt term, so during that 8-year retained period. The impact after the retained term, how the rent payments will work, our assumptions, and then a little bit of proportional pie charts to show you the likelihood that we survive and do not survive, and the gift tax that would be due and payable. Other ways to show the probability of survival, how the assets are removed over time, and a summary table. All are available in the PowerPoint illustration that is easily sent to clients. And then again, you have your information here that we loaded into the software. Another way you can do this and share with the client is just simply share with client button on the top of the screen here. It'll give you a password and generate a URL, which then you can copy to your clipboard, go to your email, copy that link in along with the password, and send that to your client, and that would give them access to exactly what you're seeing here on the screen. So then they can actually change any of these inputs that they like, if they want to change the growth rate, if they want to change the home value, if they want to play with the retained term. So again, it would allow the client to kind of be involved in the plan design to help determine the best structure for the qualified personal residence trust. A couple of other things to show that might be relevant for you and your client. If you want to take a screenshot of this top portion, you can click the camera button and it will download a screenshot for you, and you can share that with the client. You can click the arrow, the I button here, and it will hide that summary if you want to hide that from the top. Show you how the screenshot pulls up. So this is the summary here that we were able to take a screenshot of our assumptions. In other words, if we wanted to put that into a letter or save for future use, you can do that via a screenshot. We can do the same thing down here on the bottom. We can screenshot this, or we can export to Excel. So it's downloading my screenshot now. It came up there, Qprt details, so you can see our screenshot of the actual spreadsheet that can be populated. Another thing we can show is we have timelines and charts. We have proportion of gift for the gift tax. So this is the actual entire home as the full pie chart. The non-taxable value is the blue. The taxable gift is the yellow. So we're on Qprt 1 here. So you can see as we change the Qprt term, the longer we go, the higher the non-taxable value. The shorter we go, the higher the taxable value. So just an interesting way to show that to clients to help them consider what term is appropriate. Our probability of survival for all 3 Qprts, 1, 2, and 3. Our property value over time, how that property is growing. Our annual rent paid over time and how that is growing. The assets subject to estate tax and the estate tax savings that are removed over time can all be shown on these timeline and charts feature of EstateView. Excuse me. So that is the Qprt planning module in a nutshell. Again, if you have any questions, feel free to reach out and email us. We're glad to answer anything we can about any features of EstateView, and hope you have success using this and it's helpful for you and your clients. And again, thanks again on behalf of EstateView Software. This has been Brandon Ketron. Thank you.